house prices could drop sooner than you think. But more on that later. And is Liz Truss the devil?
She's got the same laugh.
Well, we'll find that out too shortly. And alongside this, I'm going to share some somewhat disturbing images. And don't worry, it's not going to make you jump out of your seat, but it may make your forehead sweat a little as we go through the latest property update video. So with that, friends, I hope you're keeping well, and let's get into the news articles. So let's start with some positive news for some people. Average UK house prices fall slightly from previous record highs in September. And yes, I know it's only 0.1%, but it's a movement in possibly the right direction. Now, we know that average house prices have decreased slightly in September, and we know that the typical UK property now costs £293,835, which therefore has its own impact on the rental market, which has now hit £1,051 per month. And we're just going to quickly look into this, my friends, because Zoopla has released a report saying that UK rents have shot up by 12.3% over the last year. Now, obviously, this is dependent on where you live. If you go further up north, prices are going to be slightly cheaper. And obviously, if you go down south, I'm sure there are a lot more. But obviously, what might become interesting is the rental sector, with landlords being hit with higher interest rates, and they will now try and pass that on to tenants. But whether or not that will be feasible is another question. Next up, we have soaring mortgage rates to pile pressures on property markets worldwide. The housing market faces a seismic change as low interest rate environment ends. So all that cheap lending that we were all kind of getting used to, things have now changed. And last week, Knight Frank forecasted that the house prices in London will fall by 10% over the next 2 years, which is going to move me on to some disturbing images, my friends. But before we jump there, since the financial crisis, UK mortgages have become less risky. And this obviously shows the loan to value ratios that people were able to take out back then as opposed to now. Because back then, 1 in 7 mortgages were highly leveraged with loan to value ratios equal to or even greater than the 90%. And today, borrowers must raise relatively large deposits and demonstrate they can withstand interest rate rises. And reckless lending has largely been kept in check, reducing the danger of home ownership into negative equity. So that's always a problem. That's why I used to speak about the 5% schemes. If you're overbuying and you're buying a property that's maybe inflated just because of what we've been going through in the last few years, and you've only put 5% down, I do worry when rates go up or if the property market does wobble. Now, here we have that image I was speaking about, my friends. So if we just look here, fast rising mortgage payments could become unaffordable for some households. Now, what essentially this graph is showing is the percentage of households' nominal disposable income and then their repayments. So as you can see here, generally speaking, up until about around 2008, repayments were less than the disposable income. As we're now into 2022 to 2023, this is so worrying because repayments are now going to exceed the nominal disposable income. And what's even more worrying is obviously we know the cost of everything else is going through the roof and inflation just doesn't seem to stop. And then essentially what this goes on to talk about is how the low rates have in effect made larger homes more affordable, driving up house prices in return. And this was essentially when I was worried about people spending according to their maximum budgets. I always think it's worthwhile just to live slightly below your means, because when interest rates do increase or the cost of living crisis kicks in or something external that you may not be able to control, it just becomes that much more difficult to hang on to that current home. And then we have Noble Francis, who's an economics director of the Construction Products Association, who was saying only 2 to 3 months ago, we were saying interest rates in UK of up to 3% would be a challenge given affordability. And I think we all agreed with that, especially when I did my earlier property update videos. But markets are now anticipating mortgage rates going up around 6%. And I think that's in Q1 of next year. So it's going to be interesting to see, my friends, and not to sound like a broken record, as I have mentioned this many times, it just shows more than 2 million households will have to remortgage at higher rates in the next 2 years. So scary times, if you ask me. And this is why I say trying to save as much cash as possible. Unless you can invest it into something more liquid, which is usually quite difficult, then you're going to want to prepare for what's coming ahead. Next up, I want to look at what rising mortgages could mean for house prices. And I say this with all my videos, although I do have my own stance, nobody knows for sure how house prices will change over the next few months. But we have spoken to some experts to get their opinions. Now, Graham Cox, director of the firm Self-Employed Mortgage Hub, said, unless we are very lucky and inflation falls much more quickly than predicted, I don't see any other outcome than a sizable fall in house prices, possibly 20% plus over the next 2 to 3 years. Now, I just want to quickly state, when people say the property market might crash or house prices will drop, including myself as well, it doesn't mean every single house across the UK is going to drop by 20%. Generally speaking, this will differ depending on certain areas which will hold their value as opposed to others which will plummet a lot quicker. However, other experts suggest demand is still strong enough to avoid house prices crashing, and they don't think a drop will be this big. Next up, first-time buyers see hopes destroyed amid rising interest rates and higher rents. Now, we know that UK property prices are set to drop by as much as 12% as those looking to land their first homes see the buying power destroyed, economists have warned. Now, of course, this is obviously a speculation. Nobody's saying that that's going to happen, but this has obviously come off the back of the warning due to the interest rates potentially hitting 6%. And as a result of this, people are now fearful that getting on the housing market is going to become even more increasingly difficult. And then you've also got the fear factor that if house prices do fall with high interest rates, who really wants to jump on what looks like a sinking ship? Next up, Martin Lewis reveals when homeowners should and shouldn't overpay on their mortgages. So I did a quick video on this, and this guy is an absolute legend, by the way. So what essentially he's done, he's released some information saying that you can save around £10,000, maybe even more, by overpaying on their mortgage. But others, however, should save instead. So don't just start overpaying, my friends, on your mortgages. And he has explained exactly whether you should dip into your savings or overpay on your mortgage. As he said that households should only overpay on their mortgage if the rate is higher than their saving interest rates. So essentially, you need to be making sure that your money is working the best for yourself. So is paying that debt more beneficial to yourself, or is not overpaying and simply saving that and getting yourself an interest on your savings better off? So it was a really timely and useful article, and he did have a calculator as well, which I will link in the description as well, my friends, as you can check yourself to see what is obviously the best for yourselves. Next up, a UK property crash is unlikely, says experts. Now, I always like to have conflicting information because I'm hoping that somebody says something so profound or so useful that we can think, well, actually that makes sense. But at the minute, it just seems people are just taking guesses. And let's be honest, that's pretty much all we can do because it is really uncertain times. So there's a few statistics here just showing obviously how house prices have moved, speaks a little bit about stamp duty. But here we have Ian McKenzie, who is the CEO of the Guild of Property Professionals. Estate agents are still seeing stock shortages in many areas of the country, something which has supported elevated house prices throughout the boom. And this is McKenzie, I'm assuming. But again, this is what I was speaking about at the beginning of the video. It really does depend on the area. Some areas will always have ample demand coming in, and that supply and demand issue that many people argue about, yes, it makes sense that house prices may not plummet as much as maybe they would somewhere else. And Zoopla has also found that early signs that buyers are less enthusiastic than they have been is now apparent, with 6% of homes listed for sale had seen asking prices cut by 5% or more, which is the highest level since before the pandemic. Now, there's a few reasons for this. One is obviously the affordability, the mortgage rates, there could be down valuations there. And also it could just be inflated in the first instance as well. So is this the first time we are now seeing that seller's market slowly start to deteriorate? Who knows? This was quite an interesting quote here. For those on variable or fixed rates nearing maturity, it's worth doing some research into looking at the options at the cost of the debt as it's now increasing daily. Something that I have mentioned many times, as we know that money anxiety is now fueled by market uncertainty. It's very worrying times. And I get a lot of comments from you guys here on the Instagram and across all my socials with these exact fears. And trust me, I'm just a normal person like yourselves and I feel these as well. So moving on to Liz Truss, who a famous person likened to the devil.
Think about it. Since Liz Truss took charge, the economy's tanked, the Queen's died, and England were relegated from the Nations League.
Whether you agree with some of Russell's comments there or not, let's just jump into one or two things that was mentioned by her speech. But essentially, she had three priorities for the economy, and it was growth, growth, and growth. She said her government would cut taxes as it was the right thing to do morally and economically. And I'm not even going to start on those two words there because it's one thing saying it, it's another thing obviously showing it through your actions. But she did say that you can trust me to do whatever it takes. So friends, hopefully you trust her. I'll keep my opinion to myself. And then essentially, we know that there was a few protesters there. There's this anti-growth coalition of Labour, the Lib Dems and the SNP. All that stuff is going on. I'm not really going to get into the politics side of that on this particular video. But one thing that was interesting was she talked about herself being the first Prime Minister to have gone to a comprehensive school. I think she's just trying to build some level of rapport with people, maybe other people on the other side, Labour, for example, and saying that I know how it feels to have your potential dismissed by those who think they know better. And I just think at the minute, a lot of the nation is having their potential dismissed because of the way things are right now. Blah, 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 blah. Don't want to bore you guys too much with that. Next up, what will replace the Help to Buy? So I think I did a video that we're running out of time, or you are running out of time, sorry, if you want to utilize the Help to Buy scheme. But there is a thing called the deposit unlock. And I actually never knew about this until I started researching for this video. And essentially this provides a conduit for first timers and new build purchases. So then what I did is I did a bit of research, my friends, into what the deposit unlock was. And essentially, my friends, it sounds very, very similar to the 5% deposit scheme. So a brand new scheme devised, I mean, the originality is brilliant. In collaboration with lenders and home building industry, it enables first-time buyers and existing homeowners to purchase a new build home with 5% deposit. It provides customers with competitively priced mortgage products. It's going to be interesting to see what they are, and makes new homes more affordable. Now, essentially, these are your big players. You've got a few there, and you've also got some participating lenders here as well. So guys, maybe reach out to these lenders and have a further look into this if, of course, this is something you're interested in. So friends, let me know your comments down below. Where is the housing market heading? What are you guys currently doing right now?